I have a strategy in gold that I think was killer to add to your toolbox. It starts in Asia. You can work it in Asia for those who trade Asia and complements your schedule, but it also works in New York. Get on the charts and we'll go through a couple of chart examples, but then I want to talk about the risk. All right, so here's this week's gold futures. Got a blank canvas here, a blank chart. Want to add a daily chart over here. I'm a big fan, even though this is more of a scalping type strategy. Uh, More of a scalping type strategy, but anyway, let's get to it. So now you want to keep in mind the highs and lows that are around this. But what I like to do is at 1900, you got the start of the eighth session. This is this is to start studying and going back and reviewing data, tracking it, and seeing if this fits your profile, something that you like to trade. So I like the first inefficiency, a fair value gap. It could be like you see how this side is nothing but buy side only, and you're just gonna have to get used to marking your charts and seeing which one makes sense. So really, the first inefficiency, 1900. You got this high back here that it ran through pre-market session high. Those right here. You just know where they at. It's not really going to be about targets. It's more going to be based on a risk reward system, set risk. So as you could tell, first inefficiency after 1900, the market refers to it, right? And depending on, so we took out this high, so better to be aiming for a short. So really wanted to come through it, kind of bump his head on it, and just like this, then um, it plays out throughout the day, right? So here's New York. Um, had a Fed meeting, cut interest rates, that this consolidation, and off to the races. So plays out every day. Um, I say, and let's go back and look at this because now sometimes I like doing it when it first forms, just for a quick scalp. I'm not really looking for a risk reward system. I'm really looking to the nearest high, nearest low, because a lot of times this first leg is going to be a manipulation phase. It's going to be a false move. A lot of times you'll get the main move. Now, as far as that session, because held by the day's action, it was a bullish, ended up being a bullish day. But Asian session, that wasn't the case, right? And yeah, you could trade it the other way, but I mean, you need to be mindful and expect your stop losses. And this phenomenon just repeats. Markets are algorithmic. Um, there's two variables I like to trade. One where you're using actual entry, right? So it pops through, comes back, and you trade it to highs. Wherever you perceive that the market wants to go, take out some liquidity or a high or call it. Then I like to trade it as a target. So this situation it would have been as an entry is what I call type B. Then here would have been as a target what I like to call type A. And my entry model. So you need your own entry model. Like trading fair value gaps, you can whatever you can wait for. Whatever your entry model is, me, I like to use order block. Just changes open and price. After we've taken out a high, this just kind of consolidated a little bit. Now, if you would have got in here, probably wouldn't necessarily took it out your stop loss. I mean, I like to use a 5 point stop loss hold. I like to go for at least a 2 or 2.5. Now New York is going to be more of a 3. Anyway, I like a 2.5 point stop loss. So I wouldn't have got stopped out, but it just depends on your risk tolerances. Um, right here, manipulates higher, takes out this high right there. It engineers some liquidity, takes that out, and when it turns back and goes across this opening price, that is your change in the state of delivery. That's order block. The whole candle's range. Use that candle's range perfectly, but I like to use that opening price. Market comes down, it's ready to go. It's going to go. So you would use this as an entry. At least most of it. You could probably leave about 20% of it closed. You can do that. It just depends on how you trade and your trading style. Go back through at FOMC this day. Go all the way to Monday, and Monday is going to be important. Here we got the 100 series of volume imbalances, and it's one-sided to the sell side delivery. Um, Efficient and buy side. This whole leg is really inefficient. So I'm gonna highlight that whole. As you can see, the market does hover around it. Um, didn't get much follow through until the 2100 macro. And like I said, it is a scalping strategy, but I am looking for that 2 to 1 and 2 to 5 cross. Chance, couple of chances in New York. But on Monday, Sunday, big inefficient. Okay. I do this one a different color just to make it to where it's easier to see. As you can tell, there's trades off of it. Holding, like I said, you're gonna have to go back, look at the data, see how you want to do it. Get all week market bounces off of that. Formed on Sunday evening, so you mark this one throughout the whole week. Uh, yeah, man, killer. So yeah, like I said, I mean, sometimes the first move is going to be the Uh, sometimes Asia is just going to consolidate a little. Like I like to use it as an entry, or I like to use it as a target. Depends how long you got to trade to watch it to wait for the right move. You get some nice moves off of it. And this one that forms on Sunday, I mean, the market just hangs around it all week. And you can go back through months and months of data. I've been tracking this for a while. Um, so let's talk about the rules for the risk here. So first rule to our risk strategy: Number one, two trades max. Say that's so two trades with a set stop loss is not going to break the bank. And so let's say if you get one green, I mean, don't get greedy. Wait for the next day, next York. If you get one red, one green, use a set fixed uh risk to rewards system. You know, that second trade that's green. Yeah, you're not gonna make. Not, your account's not gonna be the theoretical value that if you would have got number one first trade green, but still gonna be in the green from where you started at, and then next session there's always another trade. Know what I mean? So two trades max. We ain't trying to. This is a scalping strategy. One, Chris RR. Can get those. Can get those 3 to 1s, but I think a conservative approach is more of the 2 to 1, 2.5. I mean, I'm gonna at least try to 2.5 most. Fact that it's consolidating like this. It's gonna be on the 2 to 1 side. If you get decent action where the market's freaking moving, especially on a Wednesday, Thursday, when the mark or the day after you get some news like this, yeah, it's probably gonna be on the higher side, probably close to a 3 to 1, and you're just gonna have to judge with how the market's already, and you're gonna have to judge by your data and getting the confidence that hey, there is something here, strategy. Um, you got to tailor it to your personality. So, but it's two trade per session max. It's going to be main. Do not stick to this low account. Not putting in proper practice money. Just that simple. Right now, um, where I'm at, is the micro go continuous contract. I like I like to put on five contracts. Do $50 risk. Looking for about 500, $600 in. So when you're green, make that five. Next day you lose 250. Guess what? You still 250 in the green. Then the next day you make 500. Guess what? Now you're 750. The next day you lose two. You're still stay within that two trades max. Your reward, your money has to make. Some days you're gonna get the big days, like when you trade in New York. Um, you know, get the days that are gonna be bigger. It just depends on how the market's prior. You gotta know when the market's prone to consolidate. You gotta know when the market's prone to expand. Um, anyways, I hope that helps. Like it, study it. Please comment on the video. See you on the next.